What a couple. Good morning, and thanks for joining again. So today I want to talk about how we're looking at different nations adapting to the shift in global dynamics, particularly as I think the world has reached another inflection point where the several forces are reshaping how geopolitics is going to play out, which impact how the economy plays out, and is having some big social implications as well. So you have the war, the food and energy crises, you have the recession worries. So decisions being made today by leaders are really going to reshape our world as we're going forward. So I want to share with you some information from a recent report from the Department of Defense, and also just how we see some things playing out around the world. So let's jump right in. So there's two big challenges. The first is strategic competition, which has really changed. And I don't want to make it is about the democratic versus the autocratic nations, but I don't want to make it all about that. It's really more about philosophies and also political ambitions that are driving a lot of this. So we do have competition around advanced technology, which has been well documented. We have competition to determine which model is going to work better for the rest of the world, not the handful of nations that are driving things, but really the emerging market economies and the other economies that are really dependent on what the big nations do. I think you're already seeing the rising risk of conflict. We have three big areas. The way the Department of Defense looks at it, they call it the 1+1+3, and it's Russia, China, or the 1+1. The +3 would be North Korea, Iran, and terrorist states would be how they look at it. And it's really the West lining up against these nations with different philosophies that are clashing right now. And then the other thing that's really going on is the role of the multinational governing institutions are being brought into question and really being challenged in ways that we really haven't thought they would be. The other side of it, and this is what leaders have to deal with, strategic competition on one side and shared challenges on the other. And the shared challenges are really around the stuff we're dealing with today: inflation, food and energy insecurity, the climate transition, healthcare, its affordability and availability, particularly a big problem. And you saw that with the pandemic and the access to the latest advances in medicine. And then behind all this, creating a lot of social strains or immigration and displacement. And I would add to that, we have a massive demographic cliff that's being hit, that countries are really having to decide how are they going to deal with this, particularly since their social safety nets aren't really up to speed. So we're seeing a lot of issues hitting all at once, creating what we're seeing as a bifurcation of the global economy or fragmentation. And it goes back not just to the pandemic or the war, it goes back to really when the trade issues started to hit. And I would say it's the seeds of this were really sown with the financial crisis as governments were forced into modes of responding to government policy needs that they just weren't used to. And it created a lot of economic turbulence. And now we're in a state where you look at the cumulative effect of this, and it's created a lot of economic distortions. So you're seeing governments trying to respond to it in a lot of different ways. Consumption taxes are obviously on food and energy. They're giving cash payments, cash transfers. They're looking at subsidies, or now they're looking at the windfall profits taxes and things like that to try and slow demand. But they created the demand with their response to the pandemic and Russian war. So a lot of this is self-created. Now we're trying to figure out how to get out of it. And you can see the problem on a global scale, and particularly in the food insecurity. And this got ramped up again this week with Russia backing out of the deal to let grains out of Ukraine and Russia. Right now, you're looking at global food insecurity, and almost 900 million people are undernourished right now. That's going to get worse as this grain problem continues in the Ukraine and Russia. So this is a major problem that governments are going to be fighting and dealing with. And that's leading to slowing global growth. And you can see this is just a quick look at Europe. As you can see, the drop from 21 of 6% down to 2.6, down to 0.6, pretty significant slowdowns. And I really want to highlight Germany right now, the leading economy in the nation. And as you look at Germany, you can see it growing at a 2.6% down to 1.5 to negative 0.3 next year is the projection. So what's changed and what's going on there? I think it's really important to look back and think how the German economic model really was driven and what were some of the key forces driving it. I think there are several factors that I don't want to give short shrift to all the great stuff that came out of Agenda 2010, other things that the Germans had done to really reunify their nation and get it on a better track. But there are three big underlying things that helped their economic model. And the first is cheap energy from Russia. Second was low spending on defense. Germany, for a lot of reasons, was not near the 2% limit. They've made a bigger commitment now. And I think the German defense minister has been very vocal and very aggressive in her views on where she thinks the spending needs to go. And then it was the unlimited access to the Chinese market that was one of the most mutually beneficial economic relationships in the world. So as we look at where we are right now, those three things drove it. Two of the three, well, all three of them are going dramatic changes. Obviously, the energy situation with Russia, defense spending is now going up dramatically. I think they're on target to double it from about 52 billion up to 100 billion. And now the unlimited access to the Chinese market is being very much rethought because of the lockdowns, but because of other issues that we'll get to in a minute. So the two key questions for me are, how will Germany and France lead Europe going forward over the next couple of years? And this is particularly important as some of the tensions have ratcheted up in recent weeks, where France has looked at Germany going a little bit too on its own. I think the Germans think the same thing about France on a number of occasions, but this is at a critical time where you need these two nations to lead. How will they do that? And can they make it happen? And then how do the changing terms of trade impact the German economy's competitive strengths? I want to touch on a couple of these issues right now. So here you can see it's been well documented, the dependency of all the EU on Russia for energy, but Germany was not, really light in that area either. And for their industries, it was a big issue. And having this low-cost energy moving up to high-cost energies really puts the competitiveness at a disadvantage. The other issue, and I mentioned this, was Germany being a big place to export to China. In the beginning of the 2000s, it was less than 1% or around 1% of its exports. It moved up to 7.5% of its exports. But now we're in a different mode now where China is going through a lot of change in their way they're looking at their industries, some of the protectionist issues that they're putting up, and the view that once you put technologies into China going forward, they're no longer going to be yours, are all causing a rethink about how companies work in Germany. German companies will work in China. And I think one of the big issues that you're starting to see, aside from the IP issues, is really the fact that state-run businesses can come in and undercut people on a regular basis. So I think for a lot of German companies, they're looking at China as a market that they're just trying to manage down and diversify from, rather than continue to look as their growth driver, because they don't have the confidence that it can be. And you can see here again, look at the imports and exports with China, right up there with the US as one of the leading players. And I think this is going to be a big issue for the German economy of how do they manage being kind of in the middle of the US and China, and how do they play it both ways against the middle to their benefit, I think is going to be the big issue there. So as you look at the challenges for Germany, you have an over-reliance on two low trusted partners. And trust in trade is very important. And once you damage the trust, it's damaged for a long time. So this is part of what the challenge for the global economy is you're reorienting supply chains and moving to greater trust supply chains, which means you need to find like-minded partners that you can trust for the long term. I think that's going to be a big change, and it's going to require a pretty significant adjustment process. The critical German-China trade relationship has to be redefined in a more balanced way for Germany, to benefit from this going forward, but still not lose the advantages that they have of accessing that market. But it's really redefining the terms and reorienting your supply chains to reduce dependencies. The other big issue for Germany is that China's goal has been to move up the manufacturing value chain, which puts them right into the box that Germany was playing in for some time. And that creates a conflict where they're really competing head to head instead of being partners and competitive partners. They're now really moving head to head, and that changes the issue. And I think the challenge for leaders around the world was really exemplified by the Hamburg Container Port investment by China, where the ministers, 6 different ministries in Germany, were not in favor of a sale of 24.5% or 24.9% of this, one of the biggest ports in Germany, to a Chinese company. And Schultz went over and did that over and above the objections of his ministries. So it just shows you how difficult a challenge it is as he's heading over to China as one of the first Western leaders to come over. It speaks to the importance of the relationship, but it also speaks to the challenges of how they work moving forward. I think the other issue is the friendshoring, as Janet Yellen calls it, of like-minded nations aligning their manufacturing capabilities for security is a big issue for Germany, and that means they're going to have to reorient a lot of what they're doing away from China towards higher trusted partners. Reshoring and onshoring continue to change the game. So I think this is an important shift for China, for Germany, but also for China. I think we're going to have to see how this plays out over the coming period. I want to go to the other side of the globe and look at Australia and their changing relationship with China, because this is a really interesting one as you get a sense of how big a role China plays in the Australian economy and has since their tremendous expansion from 2000 forward. And it's been a very symbiotic relationship, but that changed over the last 2 years as China started putting trade sanctions on Australia. And that changing relationship has made Australia really seek to diversify their sourcing and their exports. And they've moved to a lot of the nations that are taking the low-cost manufacturing away from China in Asia. So moving stuff to Vietnam and other areas over there, but also diversifying around the world. Again, looking for more like-minded governments to work with that they'll be aligned with for the longer term. I think this shift is really one that seems subtle, but we're going to wake up in a couple of years and see a very different post-Cold War period and alignment geopolitically than we've seen in a long time. So Australia went from 20 years of a very mutually beneficial relationship driven by commodities that helped fuel China's industrialization to where we had sanctions and political tensions that have forced Australia to shift to other markets and China to look for other sources. But you can see how big a change it was. Even with the problems, exports to China were more than 42% of their exports for Australia versus 14 just in 2007. So it's a big shift. And it speaks to China's, the country's dependence on China and how big a shift we have coming as people need to think about reorienting their work away from it, from China. And I think that's going to be a big issue. And when we look at some of the challenges, geopolitical ties being one of them, I think you're going to see a lot of shifts around the globe that are going to create different relationships, both trading, economic and political relationships are going to drive the economy going forward. So trade tensions, the pandemic and war are definitely reshaping the world and the economy. Nations are being forced to balance their domestic competitiveness and domestic challenges with the shared challenges for the globe. And how we solve these two together is going to be really fundamental to what kind of a world do we have, and can we get back to seeing living standards rise, or are we going to have a setback here? And I think all the political and economic relationships in the post-World War are going to be rethought and reoriented around more security, a bifurcated global economy. So then the real question is how do leading nations compete against each other, but work together to solve the problems like climate change and others that require everyone getting together. So I'm going to stop there, Mark. I just have one last thing to leave people with. next week, on the 9th at 4:30, there will be a conference call, a Zoom call with Miles Nadell of Peerage. We'll be interviewing Frank Luntz on the election results. It'll be fascinating. I've been reading and following Frank's views coming up, and he thinks this is one of the more important elections we've had in a long time and will have big implications going forward. So feel free to reach out. We can, if you go to the IRS website, you can sign up. And I think Vanessa or Mark, we have a link that we can include in the.
Absolutely.
So I'll stop there.
Do you mind, Steve? Some people don't know who Miles Nadell is. You want to just take a quick snapshot?
So Peerage Capital is a partner with ARS. They are a family office out of Canada. Miles is the principal in it. He has invested in many intellectually capital intensive businesses. So he looks for partnering with managements of firms like ours, like real estate companies, like media companies. He's built up his fortune mainly through media, but now he's Peerage is one of the largest real estate brokerage operations in North America. We also have a broker dealer up in Canada called Echelon Wealth Partners that is a very healthy firm up there. We're in the self-storage business. Then in the US, they have real estate and ARS investment partners. So Miles is a fascinating character. He's also in the Hockey Hall of Fame and the Canadian Football Hall of Fame as a contributing editor for photography. So he took Wayne Gretzky's autograph picture and got quite a few shots with that around the world.
He also likes cars, sneakers, and other interesting things in his Dare to Dream Museum up in Toronto. All right, so questions on what Stephen covered?
Steve, can you review friendshoring, onshoring, offshoring, or whatever they were? What is friendshoring?
Friendshoring is when you create supply chains that align with like-minded nations. So that would be the US and Canada, the US and Germany, really looking to secure things that they want to have credible, ongoing resources, but you have to do it with trusted partners. And I think one of the big challenges for Russia and China going forward is, are they going to lose some of the trust? Russia certainly has. The question on China is a different one. How do they maintain the view that they're a trusted partner when intellectual property theft and state-owned enterprises come in and undercut the businesses? So it's really a way to create a national security around your supply chains with other nations.
Thank you.
Hey, Stephen, has anybody done any work? You know, there's a conflict here, right? If you're going to move supply chains and raise the bar for a secure supply chain, and you're basically giving up your sort of low-cost supply chain, and you know you're going to do this is going to be part of a portfolio of supply chains, right? And then you've got the Fed saying, and all these central banks talking about maintaining 2% inflation. Has anybody done any work, or have you got any thoughts on what that transition is going to mean realistically to the inflation rate that we're dealing with?
Yeah, I think it's like most of these transitions, it starts out inflationary before you get the benefits of it.
Hey, Steve, this is Pete, just from the intellectual property theft. I worked on that and just want to give you a quick example of what goes on. In China, they actually have laws that say that when you do a deal, it's not like you can negotiate something in a contract that we're all used to in the United States. They say that the US companies can continue to own their core technology. The challenge is, as many companies go to China for manufacturing and other improvements, it's under the law. You can't negotiate. It's under the law that the Chinese entities own that intellectual property. So there's outright just theft of IP, and then there's more kind of more people aren't familiar with the threat of the loss of their improvements to the technology, which the Chinese companies and the Chinese government owns. So as we do deals in China, we're still doing them. We proceed with caution as we were always in the past, but that's where the intellectual property really becomes just a a big issue, just as a general comment.
You know, when I was doing the research on this, the one thing I was surprised at is how the German companies are now looking at China as almost a melting ice cube for them. And they're going to just try and manage their share down and keep the revenues as long as they can and diversify elsewhere, because of, that's one of the issues, was the no confidence in bringing your best technologies over there anymore.
Exactly, yeah. So, yeah, Peter Navarro, Adam Lighthizer, all these guys, we worked with the Senate, the House, and all these people, and officials would come in from China, we would meet with them, and it's a very difficult issue, $5 trillion issue of the value of intellectual property for US companies. So very difficult, and FBI, there's outright theft, and then there's other theft. So it's an important area, and thank you for mentioning it.
And the sanctions that were put on both by the US and by China and others are really creating a different way of thinking about your businesses going forward and how you protect your economy going forward from critical areas. So I think this is an area that we're going to see a lot of change going forward. But I think, Duncan, you're right. To get safe and secure supply chains is inflationary and will carry higher costs. And that's really going to be the outcome for some time.
And that decision by the Biden administration on the chip technology not to sell them any more sensitive, that's a big deal, right? I mean, it's almost like people are equating it to World War II, where we stopped providing Japan early on with fuel and other supplies. They had no choice to, at least some people argue, once that stopped, they had limited resources. So we'll see.
Steve, can you elaborate more on Australia and China sanctions? Were the sanctions a spillover of the US-Chinese relationships and sanctions, or more of the protectionist stand of the Chinese government?
I think it was both political and economic. They were working, they were they're at odds, and this is their way of chipping at each other. It's really it's one of those things that there was a lot of tit for tat going on, and there continues to be. And China had the upper hand because they were such a big part of their exports for Australia. But Australia was pretty tough on it too, and really took a pretty aggressive stance to go after other opportunities. And quite frankly, the resources that they have are resources the world needs that Australia's shipping. It's mainly their commodities that are essential for whether it's iron ore, copper, and the like. And they also have one of the few rare earth mines outside of China, Lynas mine. So they have critical resources that can be very important for the rest of the world.
Thank you.
You're welcome.
Stephen, a question regarding the Germany's dependence on Russian oil and gas. That distribution of gas, in particular consumption in Germany, is that more leaning towards commercial use of gas or residential?
I don't know the specific numbers, but I do know that the commercial area is getting hurt badly by this. And I think that's a big issue for how a lot of these companies are going to do going forward. I think they're putting the strength of the German economy at pretty good risk right now.
I'm sitting next to Michael Spett, who happens to have just flown in from Germany. Maybe he can
Elaborate on it.
yeah.
Hi again. Sorry, we have to disconnect marks on my loudspeaker to avoid some of the duplications of my voice. In general, what happened in Germany is that nothing's happening. In fact, yeah. So at the moment, the gas. We bought a lot of gas over the last 6 months for a very high price. Germany might be one of the richest companies in Europe, and we have stored that. So we can do that. The gas price is now down by 50% from the European side, but we have not started to take any consumption out of that. So the expectation for this winter, even if we have at the moment summertime in Europe, it's very astonishing that we have a November summertime, but we have now between 20 to 25 degrees. So no one is starting to heat. And the expectation is that even if these storage will be completely used, we can survive till June next year. So the economic impact of everything that's coming up, it's much more lower than expected in former times. And from that perspective, I do not see that we have this huge impact by the energy things. The other things, inflation is much more important than the energy topic. Yes, we bought the energy for a very high price, but from that point that we have now the storage, we can definitely survive. Christoph von Oldenburg will definitely touch this point in his speech on Thursday, much more deeper than I can do this, because he specialized also on this sector. And if you'd like to follow up that one, please join the meeting on Thursday.
Yeah, Michael, I think the short term, they can get through it. It's less of a problem. But if you're thinking about your
I can hear you.
longer term planning as a running a corporation and thinking that energy costs are a big part of your costs, you're looking for more secure energy sources going forward. And I think what they learned is Russia is not a trustworthy source anymore. And I think that's really the issue, is how do they deal with this going forward? Because they got one issue of getting through the winter, as you just described, which with luck and good weather, we can do that. But then longer term, how do they rely on a non-trustworthy partner is really the issue. And how do they replace that?
Stephen, along those lines, along what you just said, and this question is for Michael. I've been reading about how Norway is taking up the slack in replacing now the largest exporter of gas to Europe, Western Europe. Are you seeing that, Michael?
No, in general, no, because Norway it's doing a lot of things, but they has not granted the other European countries a special condition or something different. So they're selling that one, but they will not secure the European gas consumption over the next time. They're doing something, but not as much as they can do. So from that perspective, everything is great, but the Norwegians has their own philosophy how they do that. At the end, they will not leave Europe, the rest of Europe alone when it's come to the harder selling point. But at the moment, there are discussions, but the Norwegian like to play in a world market together with the UAE, also with America, and they will not play a different role on that or saying we do that. The same happened also to the UK. The UK has also huge resources, and they found out that they have much more broader resources than they have considered on the coast of Scotland. So from that perspective, we have options. But all of these countries like to stay in the world market and not doing something different than we have to do in a normal economy.
Michael, the Germans are coming out with a China strategy that they're supposed to roll out in the next couple of days. Is there any talk about that in the press, or do you have any insights into that?
Sorry, Steve, I haven't.
A new China strategy by Germany.
Sorry, can you repeat?
Germany's rolling out a new strategy for their relations with China over the next week. I didn't know if there's any discussions of that in the press over there. Do you have any insights?
Change of strategy from Germany towards China.
This is an interesting point, which will come up this or next week, because our chancellor is going to China, and we will see what the outcome of the discussion will be there from these discussions. At the moment, nobody knows exactly what the German chancellor will definitely do. Yeah, and the German government is a little bit unpredictable. As with Merkel, we had a constant role going over at the moment. We have to wait what the outcome will be, and then we will see what's coming up next. Definitely, what's happening is that the German government last week denied that the Chinese people can buy more than 24% of 24.9% of the Hamburg Harbor, which is for the German economy important to have a partner on that. But it's also a discussion, especially done by the Germans. And this is going in contrast to the French, because there's no teaming up with the French guys. They say, okay, how we like to protect our core industries. Yeah, and the harbor, like the harbor in Athens, which is owned mostly by COSCO, which is the largest shipping company in China, is dominated by the Chinese. And this is something the Germans denied last week. Even if they had a contract that they can acquire 35% of the harbor. Yeah, and let's wait what's coming up there. Yeah, the Germans like to protect themselves a little bit more than in the past. Also against China.
What about, this is for Stephen and probably Michael too, sorry. What about India as an alternative market for Germany to kind of push into? Does India not have the wealth, or?
India is the market everyone's turning to, and it's the market everyone's been waiting for to realize its potential for some
Past
time.
50 years.
Yeah, but yeah, it is the place that everyone's looking at. It's where people are, it's got the population, it's got the chance for a big middle class, and it's got the education. It's got some other issues too, as each nation does, but that is one of the hopes. I don't know that they can get there as fast as they want to, and you're losing, when you lose the Chinese market, you lose some other things too, like you're in market with their manufacturing. That makes a big difference too in keeping costs down. So everyone's scrambling right now. This is a major change. I don't think it's as simple as the way people are looking at it. It's just, business as usual. You just change supply chains. This is a reorientation of global trade.
Stephen, back on the Germany numbers, when you look across bilateral trade with China, your chart went by a little quickly. How much of that sort of, let's just call it, tick down is potentially simply China itself slowing down? COVID is still a thing. Chinese economy isn't back to what it used to be, and so if you just do a compare and comparison, just take a guess, how much of that is policy and how much of that is just pure economics?
That's a tough one. That's a great question. I wouldn't even be able to guess that, to be honest with you. I think I suspect the issue is that it's pretty heavily both, but I think the Chinese economy was very strong last year, and the numbers were through last year. So I think you're going to see it start ratcheting down more going forward because of the less because of the slowdown, more because of the politics.
Okay. Well, just to comment on Germany's, I don't know anything about Germany's plan for China, but historically, the worst thing that you can do with a plan for China is to publicly announce it, because you put it in their face. If you want to do something, do it quietly and just do it.
Yep. Which actually brings up, Mark, I made a misstatement again last week. I want to correct. I did some work on the standing committee that came in, and I mentioned that they didn't have the same, they were more ideologues rather than strong technical backgrounds. And the broader standing committee, the 25 top people, actually has a higher educational background, more engineers, more economists than the previous group in the standing party, the group of 25. So they did, just because they're loyalists doesn't mean they're not very capable to move up in China into the top ranks. There's so many choices that they can make that you have to be talented to get there and have some capabilities. Doesn't mean they'll do the right thing, but it doesn't mean that they're not quite capable of doing the right things. So just thought I'd clear that up, so I don't have someone ripping me on that one later on, appropriately, by the way.
Well, most of us don't even know, Stephen, so you're good, but thanks. Hey,
Well-
to follow up on some of the comments, Pete and others, what do you think about the flip side on China in terms of their dependencies on Australia, for instance, things like that? Because I know that China would like things to be very monolithic. They're trying to move more to a consumer-oriented economy where they can kind of be much more their own masters, things like that. But can you comment at all on sort of their vulnerabilities, to the other side?
I think China's in the worst spot they've been in a long time right now. I think they are vulnerable. They need stuff from the West. They want to be viewed as equal to, if not above, everyone else, and they want the top seat, if not one of the top 2 seats at the table. And if it's one of the top 2, they want it to be equal. But their economy is in a terrible spot right now. I think their debt issues are going to come home to roost. I think the slowing is real. I think they're in a spot where they have to decide who they want to be in the world order, and not just on their terms, but on the rest of the world's, because they're becoming a place that's harder to do business with and more costly to do business with. So why would people keep promoting something that is a challenge for them? So I think that China has to come back into the fold a little bit more, but I think every nation has to rethink what's their role now and how do they want to play it, including the US, and how do we want to approach China? Do we want to partner with them and kind of give up, kind of co-run things or co-regulate things, or do we want to go it alone with our European allies in Australia and Japan and others, South Korea, and figure out if we're going to align that way? I think it's it's a fascinating time. I think we're going to look back on this and say that pandemic and the war really changed things a lot more than we thought.
Yeah, if I could just add, I think in the past, when we were looking at international deals with China, when we had them as a partner, or some companies or investors from China, that was considered a positive. Nowadays, as we work with investors and do JVs and other deals, it's just not, because of all the concerns with intellectual property theft, concerns with them just not kind of participating in the ordinary course of international business deals, capital flow, everything. It seems to be more problematic, and obviously with the technology constraints that are coming on board and will only increase in the future. I've told several clients, just the world is a big place. Don't do a deal now with them, and there's other places to do deals.
It's interesting. If everyone thought that China was the market you had to be in the last 20 years, I don't think that'd be the top of their list for the next 20.
I agree. Yeah.
And I don't think it's just IP either. It is really it's about the whole thing. It's about, are they, or can you count on that business going forward the same way? Can you count on not getting knocked out by the state, a state-run entity, or getting undercut? I think those are the issues that people are really going to be faced with. It's going to be very difficult. And I think people are going to really be creating business plans to manage down the revenues that you're getting from China to fund the other growth initiatives, and then make your shifts if you can.
Come join our 361 Firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.